This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com. Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the Nasdaq100 futures chart. Just before I start today's video, as always guys, anyone who's interested in joining my free analysis group over on Telegram, then please do not hesitate to scan this QR code on your screen. Let's start here by looking at the Nasdaq100. We were trading rather nicely in the green going into the US Open. The markets have just in fact opened and we're still up around 0.2%, trading just above 11,700 at 11,730. Now, looking back at this week, we haven't really moved that much. We've had a few spikes towards the upside. I think earlier on in the week, we did go and briefly hit that 0.5 fib area, which was just above 12,000, which was starting to look very positive. And then the past day or two, we've kind of just fallen ever so slightly. And yesterday, we actually went and tested that 50-day moving average. But it's positive to see that the bulls have stepped back in. And this is something that I did, say to my free analysis group and over on my Signal channel as well, that if any dip occurs this week, it should be bought. Now, looking at this graph, I feel like it's heavily dependent on what the 10-year bond does next. We've had this typical technical movement where we've broken below a supportive area, which is the 50-day EMA. We've gone to the next target, which is at 0.382 fib area. We're currently in the process of back testing the previous support as a new resistance in this market, and I expect that we get rejected here, and in the following days and weeks to come, we will then go and have that follow-through movement where we take out the swing lows and trade back down towards 3.6%, and we could even go lower, guys. We could easily go down to 3.43%. I still do believe, due to the seasonal seasonal trends here in the stock market, that we are still in for more upside. I don't think that this is anything more than a bear market rally, unfortunately. I feel like we go up a little bit higher and then we ultimately have one final push lower. I feel like the lows will be in at around February, March of next year. Of course, we have earnings season coming thick and fast already. I know we've just finished earnings season, but we're basically going to start to hear from banks again come January 2023. So just in about a month and a half's time. So, once we start to hear from earnings that there's been a real slowdown, then I personally believe that's when you could potentially start to see bottoming here in the stock market. But if you're a longer term investor, I could argue that you might as well just stay invested here. We're about 2/3 of the way there towards the downside, and you need to be really smart to be able to pick the bottoms in these type of trends. And I feel like it's moments like this where you just have to take a step back and just perhaps confess that maybe you're not smart enough to time the bottom, because it's a very incredibly difficult skill to have. Even the top hedge funds in the world aren't able to do it. You can just say to yourself, I might not be the smartest, but I'm definitely going to be the most disciplined, and I'm going to stay in these positions for the next 6 to 12 months, maybe even longer. And, if you ask me, where do I believe the markets are going to be in 12 months' time? Are they going to be higher or lower than current levels? Or then I would probably say higher. Well, I hope so anyway. But, if you're a short-term investor, I still believe there's a fantastic buying opportunity. A little bit higher here in the Nasdaq100. Up towards the top of its downtrend, which still offers a 5% rally, which is very significant. And then from there, I feel like we go down lower. So short-term buy here for the Nasdaq100. But if you're more of a longer-term investor, then I wouldn't think about selling here. I would just stay put. You've gone through a lot of hard times to get to these current levels. I think it would be very bad if you threw in the towel here and then, I was proven to be wrong and the market did actually go up and correct.